brand new year of the S&P 500, and we're going to start off taking a look as well at ES to start off a new year 2022. So happy new year, everybody. I hope you had a wonderful Christmas holiday, whatever you celebrate. I hope you had a wonderful holiday. Everybody celebrated New Year's Eve and New Year's Day, and we're ready to get back to work on Monday, although there might still be a little bit of thin volume this week. My son here in the Midwest, we are still off of school for another week. So let's see what we have in store for us. There might still be some volatility this coming week with thin volume, and a lot of people maybe are still away from their screens to start off the new year. But anyway, we're going to start off looking at ES because ES played out two beautiful examples of two important rules that we follow in our trading. The 80 handle rule, which is stocks, securities that hit an 80 handle or an 800 handle or some combination of that 80 level, go on to the next 100 handle. And for us here with the S&P 500, we're talking about the 4800 handle on ES. Once ES broke through 4780, it took a look below 4800 and failed, making an all-time high in session with the S&P 500, which made it over 4800, but ES stopped dead cold at the last level it could before hitting 4800, 47.9975. And by the overnight session going into the next day, Friday the 31st, we hit 47.50. What do we always say happens when we fail at 100? We pull back, we try to hold 80, and if 80 doesn't hold, ultimately we're probably going to wind up back at 50, that halfway back point of the 100 level. You know, from 100 back to 0 is 50. This is a rule that was really born out of the time that a lot of stocks traded towards 100. And once they got above the $50 level, they moved to 80, and then they would move on to 100. And now we have iterations of that, and going up to, maybe an $800 level, an 1800, 2800. But here we are on the S&P 500 and S&P 500 futures at 4800. And 4800 is going to give way to 5,000, another completion of the 80 handle rule. If we can get through 4,800, we're going to move on towards 5,000. I'm not saying that's going to happen in a month or a week. It might be something that is, maybe we look above 4,800 and fail, and towards the middle or the end of this year that we're going to trade, we'll work our way towards 5,000. But that's going to be the underlying goal, is 5,000, whether it happens sooner or later on in the year. So anyway, we traded down to 50, and then we bounced back. And what do we bounce back to? A combination of 47.80 and the halfway back point between this high and the low that we traded, which was 47.75 and change. Here was a look above it early in this session along with S&P 500 in the morning on Friday, another try in the afternoon on Friday and fail, and then melt down into the close. But a clear bounce off that end of the day low as well. People just taking money off as we headed into New Year's Eve and New Year's Day. A lot of fear that something can happen in the world. A geopolitical event can happen, or a terrorist attack can happen. People often just take money off violently at the very end of the day as we end the year. Nothing too major because they don't want to get hit with a tax bill for selling their winners, but we do see a little volatility in futures, which ends up affecting what the S&P 500 does as well. And here we are looking at the same time frame of S&P. S&P took a healthy look above 4,800, but because of the spread with ES, this is 48.08, almost 48.09 on the S&P, and it was a look below 4,800 on ES. Came back here, tried to hold on to 4,800, but rolled over off of that, and in the end broke down and closed and ended the year at 47.66 and change. And what was that? It looks so bearish here, doesn't it? Oh my God, when you look at this small intraday time frame, but when you look at the daily time frame at the roadmap, we didn't even break into the halfway point, below the halfway point of Monday's range. Monday, the week we just traded, was a gap up and go to a new all-time high, another new all-time high the next day, a failure to make an all-time high, but we made the new all-time closing high on Wednesday of last week. Then the new all-time high on Thursday, and subsequent failure and sell-off to end the year, not making the required new daily all-time closing high that we needed to go with this high. But at the end of the day on Friday, what was the close? The close was a brand new weekly all-time closing high. So I warned you that as we got into New Year's Eve, we might see a little meltdown at some point during the day, either the whole day or at least at the end of the day. But unless we melted down all the way back to 47.25 and failed to close above that, unless we did that, we were going to close at a new weekly all-time closing high. And I can tell you that we've also closed at a monthly all-time closing high and a yearly all-time closing high. So this is a very big achievement on Friday. Even though it looked bearish intraday, it felt bearish intraday, we might be looking at a big bullish start come Monday because this was a lot of bullish stuff that was going on here. Weekly, monthly, and yearly all-time closing high. If I am wrong about this and we continue to sell come Monday, we're going to see that 47.50 level break on ES. And if ES is below about 47.42 come the morning, then that means the S&P is going to get pulled down below 47.50 as well on the open. And we're going to sell off down here and try to hold inside the range of Monday of week 4. This was a big range for us. If we can't hold inside that range, then we're going to break down. We're going to fill the gap to the week 4 close back here at our old weekly all-time closing high, 47.25. We're going to test the 10-day, and if we break down below the 10-day, we're going to come down for a test of the 20-day and fill this other gap in. This should be enough to bring in the bulls to pick it up and reverse. If it's not, then we do have a little bit deeper sell-off on our hands because we know that once the 20-day breaks, things get ugly. So if the 20-day is allowed to break, or if we take a really big look below it, reverse, and close back above it, we got to see what happens on Tuesday. If there's more selling and another break of the 20-day, then we know we're going to at least probably double down from our all-time high to where our break of the 20-day is. We'll probably take that and double down. And that would get us all the way down here to test this second low that we made in December. Early December, we made the December low at 44.95. We came back and tested that on December 20th, 45.31. And I'm going to show you another chart in a couple minutes, but this would be a percentage. This would be in conjunction with a percentage sell-off for us off of our yearly close. This is what would get us down here to this 4,500 handle, somewhere on the 4,500s on the S&P. But that would be a three times in a row higher low hold, and I think that that's what would get us the buyers and would get us taking off again on the S&P. So if we're gonna see bearishness, we want to first see if the 10-day is going to hold, and if the 10-day doesn't hold, then the 20-day's got to hold. But if the 20-day breaks, probably going to wind up all the way somewhere down here in the 4,500s, be it 45.50 or be it 45, a closer, a good look below 45.50. If we are going to be bullish though, like I really think we are, because this was a weekly, monthly, and yearly all-time closing high, I think we're going to gap up open instead, and we're going to be going after that 4,800 level on ES, and that's going to get us a new all-time high as well on the S&P 500. And we're going to take off, and we are going to continue our quest for the top of this bull fork. This bull fork is going to be 48.94 come Monday. It's going to rise over 4,900 come Tuesday, and it's going to continue to keep rising. If we were to go on and put on 5% on the year we just closed, so for our new year, a 5% gain would take us all the way to 5,450. So that's a pretty good achievement. On the other hand, if we were to take a 5% move off of the year we just closed, that's what's going to get us back to this 4,500 handle. That would be 45.28, but that would end up being a break of this low, so I don't think we would go the full distance all the way 5%. In fact, I think that maybe we would even hold the bottom of our bull fork and reverse off of there and go. All right, so those are my early year thoughts. I hope it all made sense. We got to see 4,800 go down on ES, and then we're going to have our eyes fully back on the S&P, working towards the 4,900 mark, towards the top of this bull fork. One other thing I wanted to take a look at before we end is the option volume. We want to be using the Friday, January 7th, 2022 options when we start our new week. I want to point out this big volume here at these 4,800 puts. To my mind, either this was everybody who had open interest in these, just taking profits on that drop on Friday, which will be bullish. If we see low volume in these or low open interest on these on Monday, then we know that these were either just profit takers or these were put sellers instead, which means we are going to be back above 4,800 early in the week, and we're going to make that support, and we're going to go because people are picking up this huge credit, or people were taking profits on these and just getting out of them. Over on the S&P, however, there is some pretty good volume here at 47.75 and 80. So if these are long call spreads, we are going to see a move above 47.80 and hold. But if these are short calls, we're going to see some resistance here at 47.75 and 47.80. So somebody's going to win here. Either it's these people here that are shorting these calls, or these people here that are shorting these puts. Those are my thoughts as we start off the new year. Hope it all made sense. If it didn't, send me a direct message on the private Twitter account. Have a great rest of your Sunday, and as always, good luck and good trading.